This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com. Statements of cash flows. This is the last session on this chapter. Now, what we've looked at so far in the pro forma and then with the example, we produced a statement of cash flows, and we used what we called the indirect method. And what it is that under that first heading, cash flows from operating activities, what we did, we took the profits and then we adjusted. We took the profit from the income statement, the operating profit, and we add and subtracted for non-cash items and for changes in receivables, inventories and payables. And we call that the indirect method, because there is another way we could have got the cash flows from operating activities directly. It's called the direct method. And what we could have done, especially of course with computers where we could just press a button, is instead of having to adjust our profit figure, could we have not got directly how much cash customers had paid us and how much cash we'd paid out for suppliers for expenses? And that should have given us exactly the same figure. Direct method, you take the cash receipts from customers and you deduct the cash we've paid for goods and for services. Goods and expenses. I'll show you how with figures in a moment, but in both cases it would give us exactly the same figure. It would give us the cash generated from operations. Cash generated from operations. Now the rest of the statement would be exactly as before. Everything else the same. It's just that first bit, the cash generated from operations, we do have this choice. Either what we did before, profits as adjusted, or go straight to it, cash receipts less cash payments. Now, although the direct method may already seem more obvious, certainly with computers, in fact, for the exam, the indirect method is by far the most important. And the reason is, in fact, because although the accounting standard does allow you to use the direct method, you still have to show the indirect method as a note. It has to be there anyway. So you can do the indirect method on its own, or direct, but you would have to do indirect as well, which makes it much less important. I will show you with some numbers exactly what I mean. Any mention of the direct method in the exam almost certainly will not involve numbers. It would just be proving that you knew what it was. It'll give the same answer, but we just get to it in a different way. However, to make sure you are clear what I'm saying, let's do some numbers quickly. Can you turn to page 91, example 2? And there, only an extract. I've given you the income statement for the year to 2007, and the net profit before tax is 240,000. I've given some extracts from the statement of financial position of the balance sheet, this year, 2007, and last year, and there's a bit more information. There's information about depreciation, bad debts, irrecoverable debts, employment costs, and information about disposing of an asset. And we're going to work out the cash generated from operations using A, the indirect method, and B, the direct. So let's do it first of all, indirect, which is the method we used before. And in fact, it may be an idea to pause the recording now and have a go at it yourself and then switch back on and check. But anyway, the indirect method, we take our operating profit, which here is 240,000, and we adjust for those two reasons. First of all, the non-cash items. Well, note 1 says there's depreciation of 36, so we'll add back any depreciation. And as I said before, the only other one you'll ever see, profit or loss on sale of an asset. Well, during the year we sold an asset for 24, which had a book value of 18, and so there was a profit on sale. So we'll deduct the profit on sale. 18 sold for 24, it's 6,000, which brings our profit so far, or the cash profit, to 270,000. The other reason, though, was the increase in receivables and inventory and payables. Well, let's look there at the extracts. First of all, there's been an increase in inventory. It went up from 140 to 160. It went up by 20,000. And remember, if inventory goes up, with less cash we deduct. Similarly, there's been an increase in receivables. It's gone from 235 to 259, an increase of 24,000. Again, we'll deduct. And finally, an increase in payables. 138 to 168, it's gone up by 30. Remember, if payables go up, longer to pay, we've got more cash, we'll add it. And so finally, the cash generated from operations is 256,000. That's only the first bit of the statement. If you look back to the pro forma, we then need to deduct interest paid, dividends paid, tax paid, and then do the other headings. But the rest of it will never change. It's just this bit, the 256,000, that we can get in the alternative way, the direct method. And so we're going to repeat it, but part B of the question, see if we can arrive at the same figure using the direct method. Now, I said before, with the direct method, instead of taking the profit and adjusting, we simply take what cash we received from customers and what cash we paid. However, the strict layout is above the example on page 91. We show the cash received from customers. So let me set it up and then we'll fill in the figures afterwards. So we'll work out how much cash we received. We deduct the cash we've paid, but we split that under three headings. It's the cash we've paid to suppliers for goods, separately we show the cash we've paid to employees, it says cash paid and on behalf of, well, because of personal tax and things. Some cash went to the employer, some cash would have paid tax on their behalf, but it's the total wages effectively. And thirdly, we show separately any other cash payments. So of course it is a cash exercise, but get the cash receipts, the cash payments, And again, we should end up with the cash generated from operations. So let's have a go. We'll fill in the figures and see what we get. First of all, let's see if we can work out the cash received from customers. Now, several ways you can do it. Do a little statement if you want. I think the easiest is a little T account. I'll do a T account for receivables. Again, it's good practice on its own. This could be asked somewhere else. Let's make sure. If I do a T account for receivables, at the beginning of the year, the end of last year, we had a debit balance of where is it? I've lost it. Receivables, 235,000. Why will that change? Well, during the year, we'll make sales. Any sales on credit? Debit receivables, credit sales, and here it was 1.2 million from the income statement. Why else will it change? Well, of course, we'll have had cash received, debit cash, credit receivables, and that's the figure we're trying to find. But another reason it will have changed, of course, is if we've written off any bad or irrecoverable debts. And in note 1, there are bad or irrecoverable debts of 14,000. Credit receivables to remove them. Finally, we do know what balance we end up with. The balance at the end of the year, where is it? 259,000. Well, the cash received must be the missing figure, so let's check. The debit side, 1.435. And so the missing figure, I think, is 1162. And there is the first of the figures we need. So let's fill it in the statement. Cash received from customers, 1162. Let's move on. What about cash paid to suppliers? Well, here we're going to have to do two bits, because we know from the income statement what the cost of sales was. It was 840. But of course that's not what we actually bought from suppliers, because there's opening and closing inventory. So again, let's sort it. Surely the cost of sales, we take the opening inventory, we add on the purchases for the year, we deduct the closing inventory, and that gives us the cost of sales. Well, here I know what the cost of sales is. It's 840. We know what the opening inventory was. It was 140. We know what the closing inventory was. It was 160. And so, maybe you wrote the figure straight down, but surely it must mean the purchases are the missing figure. The purchases must have been 860. If you prefer, we had to buy 840 for what we sold. We had to buy another 20 to increase inventory. But whichever way you look at it, we bought goods for 860. However, we're not there yet, because I need to know what we actually paid. And of course, there are payables at the beginning and end. So again, if you can write the answer straight down, fine, but I'll do a little account for payables. At the beginning of the year, we had a credit balance owing of 138. During the year we made more purchases. Debit purchases, credit payables, we just worked out 860. During the year we'll pay cash, credit cash, debit payables, and that's the figure we're trying to work out. However, the balance at the end we know, payables 168. Again, the missing figure must be the cash we'd paid. Which I think comes to 830. So there's another figure. Cash paid 830. Let's put it on our statement. Cash paid to suppliers 830. Next one. Well, next one's a very easy one here. Cash paid to employees, and it's given us in note 1. It says in note 1 at the end, there are employment costs of 42,000. So that one we can write straight down. Finally, we need other cash payments. Well, the other cash payments, we've got our distribution and admin expenses of, what is it, 120,000. However, for various reasons, although there's the expense on the income statement, that in fact isn't the cash we actually paid. And there are several reasons. First of all, if you look at note 1, included in that is depreciation. Well, of course, we've already dealt with that, and depreciation isn't a cash payment, so we'll deduct depreciation. Certainly no cash paid, 36. What else? Bad debt write-offs of 14. Well, we have lost money with the bad debts, but did we not deal with that when we worked out the cash from customers? So we'll remove it from here. Employment costs. Well, clearly that was a cash payment, but we've shown that separately. We're not going to show it twice. Take it out. 42. Finally, though, note 2 tells us we sold an house in it. We made a profit of 6,000, and it's been netted off expenses. So our expenses, in fact, were actually higher than 120. We had expenses of 126. We reduced it by the profit on the sale of the asset. Well, remember, we're trying to get the cash expense. The profit itself isn't cash. We need to add back the profit on sale. 6,000. Which means the actual cash we paid for other payments, 120 minus 36, 14, 42 plus 6, is 34,000. So let's go back finally and see if it works. Other payments, 34,000. And so the cash generated from operations just as before, 256,000. Now again, the statement allows either way. In practice, direct method wouldn't take as long because these days people are computerized. Depending on the software, obviously, you should be able to press a button and get cash receipts, cash payments directly. However, remember that even if you do decide to do direct method, you still have to show this bit as a note. So the indirect always has to be there. Direct will give the same answer. By all means, we can show that as well. I went through that fairly quickly because, as I have already said, to do numbers on the direct method is almost impossible for the exam. So although go back and check if you're worried, I wouldn't worry too much. It's the indirect method that matters. But do be aware of the alternative and be aware basically the approach we're taking.